We're back live, and it's my great pleasure to introduce a friend of Astea for many years, David Cremin, who joins us from Boulder, Colorado. It's not every day that a prominent US venture capitalist agrees to speak to an audience in Sofia. David is the founder and managing partner of Frontier, an early-stage venture fund operating on both coasts of the US. He is also a venture partner with Techstars, one of the most important and productive accelerators programs driving entrepreneurship around the world. David has raised in excess of $200 million in venture capital partnerships and has led to investments in over 100 companies, including DivX Networks, Big Frame, which was sold to DreamWorks, Clear Access, which was sold to Cisco, and more recently, DailyPay, Prolacta Bioscience and Noteworth. Prior to launching his first venture fund, David was a music entrepreneur and toured as a professional musician and recording artist. He holds an engineering degree from Stanford and has taught business feasibility classes at various universities. He's going to talk with us today about market validation from the perspective of the potential investor, the venture capitalist. And given his background, he has a unique perspective on how early stage companies can, or perhaps should, assess market opportunities for products and services. We at Astea feel that proper market validation is an especially relevant subject for developers and entrepreneurs, and is one that we think about a lot as we consider various internally funded products to invest in and launch. So, David, welcome to Astea Conference. The floor is yours.
Well, thank you very much. I'm so happy to be with you all today. I would have much preferred to be in Sofia with you all in person and enjoying discussion about technology and entrepreneurship and market validation. But this will have to suffice, but I'm very pleased to be here. And I've known the Panda family most of my life and have not only enjoyed that and been inspired by that association, but also Eftem always had a dream, and Ludmil shares it, that great software engineers in Bulgaria would translate their actions into ownership of many startups, and the result might be big enterprise creation and wealth creation in Bulgaria. And I know today all of you are great mathematicians, coders, engineers, and some of you may want to start companies, and this is going to be a discussion about how to get it started. There's many more stages, but market validation is in particular valuable when you've come up with a good idea. My background's already been given, but I thought I'd add some pictures to add to it, because when I was at Stanford, I was in the marching band, and there's a shot of me doing that. Then I was actually touring as a musician, and that's me with all that hair and those jeans. And then I began to represent other artists as a startup, and was backed by a terrific venture capitalist, Tim Draper, who then helped me start a fund in 1998. And that's when I stopped having hair and started wearing a suit. And we've recently closed our 6th Draper fund, Draper Frontier, in 2018. And that's me at the bottom playing guitar with a bunch of my venture capitalist friends. So I remain passionate about music, but I also remain very passionate about startups. I want to give you a little bit of insight into the mind of a venture capitalist, because I assure you that across all my colleagues, we have a very strange filter of the world. When you are thinking about pitching to us, what we want to know is, what problem do you solve, and what do you do? And why is that even interesting? Meaning, what is the market opportunity? And we tend to look for market opportunities that exceed $1 billion of revenue to a company. So what is the value proposition you offer? Why would a customer buy? And why will you win? Do you have an advantage? What is your rollout strategy? How will you sell? And what's the team like? And how much money do you need to get there? That's how I think about a company when I hear the first elevator pitch. So here in with me today in this meeting, in this conference, there's a bunch of great technologists. But do you all make great entrepreneurs? Do you have a great technology idea? And how would you know if it's a great business idea? What would you do to even find out? And I think this is what we're going to focus on today. The other thing that I always talk about is, to be an entrepreneur, you certainly do make a bunch of other sacrifices, which include financial, friendships. You challenge your family at times because your priority is the startup. You challenge having fun. And it really comes down to, are you a missionary or a mercenary? Meaning, as a missionary, you have to do that startup. It's the most important thing to you. You've spent your whole life on it. Whereas the mercenaries I meet and generally hope I'm not funding are people who are in it only for the money. So really not everyone should be an entrepreneur, but let's get to what matters here. If you're still ready to try to be an entrepreneur, you're engineers, you're software designers, you're working with the best new technologies. And by working with a new technology, you have an idea for a business, a terrific technology, and you're pretty sure that there's a group of customers out there that should love your solution. So what's the startup process? You set out to create it. You design your product, you build a prototype or a beta, and then you have it and you're excited and you go out to sell this product or service to customers. And yes, indeed, you're ready to make $1 billion company. Wrong. I think that's a mistake. And the thing that I always talk about with the Astea group is that it's a mistake to design something, then build it, and then sell it. And this goes back to the mind of a venture capitalist. Why did you even build that? Why is it interesting? Why is there a big market? And I think this is the area where software engineers may not think about what steps to take to decide whether to launch a business or not. I think the first thing that you should do is sell, which may make no sense if you don't have a product or service, but you pretty much have one in mind. So we suggest that you go out and interview potential customers. And if that means you have to bring a brown box or a paper bag and just say, here's what we intend to build in this brown box or paper bag, and you, the potential customer, we think it will do this. What do you think? What else do you wish it would do? And then be quiet and let your customer tell you what they actually need. That way, you don't build the wrong thing, because if you go to a customer and say, ta-da, I built this terrific thing, and they say, that's fabulous, but our real problem is over here, you realize that you built the wrong thing. But if you ask 20 customers and 18 of them say, your idea is very good, and what I really need is this, and you hear that 18 out of 20 times, boy, maybe your customer just designed your minimum viable product, the first thing you should go build, because my bet is 18 out of those 20 customers would probably buy it. In fact, I would even ask them when you're interviewing them, if I built what you just said, would you buy it? What is it worth to you? How much might you pay for it? So now that you've interviewed a bunch of customers, you have validated that there's something out there that they need. Now I would go design it. And I would get your early prototypes. Then I'd go back to those same 20 customers and maybe even 20 more, and I would sell it again. It's not done yet. Just go sell the concept. Did I get it right? Did we solve your problem? Is it still valuable for you? Then maybe tweak it some more and then get working on your MVP. And then, and only then, do you go out with your product to sell it. And I believe that you will be in an advanced position to be able to sell those early customers very quickly. So the process is not design, build, and sell. It's actually sell it first, design it, sell some more, design it, then build it, then sell. And that is, I've invested in many companies where I thought that they knew what they were doing, and we went out to the customers with a finished product, and in fact, we had built the wrong thing. So market validation is not only for all of you, if you are thinking about a business, it's actually the first thing I will do when I meet you and you're pitching me a business. If I'm interested, because you very clearly expressed what you do, why it's interesting, what's the value proposition, what's your rollout strategy, why you're going to win. Once you've convinced me that there's something to learn about, first thing I'm going to do is call 3 or 4 customers, some that you may hand me to call, and I'm going to ask them why they're buying and why they'll keep buying. And some maybe you don't know that I know, and I want to validate that you are right. So we'll ask the customer questions like, how did you find this little company? Why would you use the product over, say, a competing product? Why is this valuable for you to use? Meaning, why do you need it? Or is this just nice to have, and in a pinch, you might give up using it? What we really want is something that someone really needs. And what do you wish the product also did? The same question you asked them earlier. And how much are you willing to pay for it? Do you have a budget for it? I mean, these are things you could also be asking the customer. I always like to know who's the decision maker to buy, and why will this customer keep buying, and what could possibly stop you from buying it? So I will ask the same types of questions and see if you've done your homework, because if you have, and I hear the customer is absolutely insanely in need of your product, then, and I hear it across 3 or 4 customers, that gets me really excited because I know you've built something really valuable. So I want to tell you a couple of real life experiences I had in our own portfolio, and I'm only going to go through 2, but I'm going to try and keep the rest of my comments fairly brief so that I can answer questions, because hearing questions and answering them can be so much more valuable than falling asleep while I talk. But Prolacta Bioscience, they are the experts in the science of human milk. And it turns out that human milk is a very healthy product, and that the substitute made by companies' formula is not as good for babies. And in fact, especially micro premature babies should not have the substitute. They should only have 100% human milk diet. We wondered if this was a true statement when we originally met the company. And they had a little bit of trouble selling initially, and it was very early in the process, but we actually went out to a bunch of neonatal intensive care units to find out whether this product was really needed. And what did we do? We walked into each of these different hospitals, whether it was Stanford Hospital, where we first started, or in Texas, and we went into the neonatal intensive care unit and we talked to the nurses, and we looked at the facilities. We noticed there was a refrigerator that was in there. We knew they could house the product. We asked the nurses what they use. Every one of them said we use 100% breast milk if we can, but it's hard to get. People donate it. We don't know if it's safe. We really learned that the nurses and the practitioners wanted this product. Then we had to go prove that it was safe, and it was and there was efficacy, meaning that it worked. So we had to do a study and discovered that 1 out of 8 micro premature infants might have very complicated surgeries or die if any kind of formula substitute was introduced. So we really found that there was a need for this product, and today it is a multi-$100-million company. The second one I want to talk about is Noteworth, which went through the Techstars program and worked very directly with a hospital in Los Angeles to develop a telehealth solution. What's really interesting about this case study is they worked very closely with one customer and built a good solution, and that customer, Cedars-Sinai in Los Angeles, bought the product. We went out to 20 other hospitals, and they all said, sadly, well, this product's great, but what we really wish it did is this. And that happened across 20 and then 40 hospitals. So we built the wrong thing. And that was sad because we had blown through a little bit of investment capital to get there. And our partner at Cedars was very different from every other hospital. So our mistake, I make them every day and will continue to make them, but quickly, the team took the remaining capital they had and began to build what they'd heard from 40 or 50 other hospitals. They ran out of money, but I believed that they had built the correct product, and I was able to talk to those hospitals and hear why they wanted it, why they would buy, and I even spoke directly with the first customer who committed to buying, and I ended up funding the company again with more capital. They were able to go out and get their first 3 or 4 paying customers, and they've just raised a $5 million round earlier this year in the middle of COVID. I was very proud of them. And they're now in 7 hospitals, and their revenue has grown from annually 100,000 to over 3 million, and they probably will grow much faster because they validated a market after getting it wrong, and now they know that the hospitals will buy and they need this. So overall, one of the things I often say is articulation, not gesticulation. What do I mean by that? If you go out and you do your market validation, when you go and give an elevator pitch to a VC and you can convince them, or any investor, here's what we do, here's why it's interesting, here's the value, here's why we're going to win, and here's evidence from our customers, you've just articulated to me a real business. Whereas sometimes I get a lot of people swinging their arms around and showing me stuff, but there's no metrics, no data, and nothing that really drives me to believe that they have a business. So I think market validation is very important. And I believe as the Astea dream begins to come true, that there are brilliant engineers, software developers, scientists, and mathematicians in Bulgaria, that if you all have good ideas, that's the first step you should take. Validate a market to find out if there's really a business. And with that, and if you're all still awake, I would be happy to answer some questions.
Thank you, David. I think this was all quite interesting, and I have a list of questions already by our audience. So the first one is, what is more important for a startup, the idea or the right timing for that idea?
It's interesting. I would say neither. I would say the most important thing is the entrepreneur. And when I said missionary versus mercenary, if I see someone who is uniquely focused and uniquely driven and uniquely passionate about a subject, and they can tell me why customers will buy their product or service, that's a combination of a great entrepreneur. And forgetting the idea or the timing, if the customer wants to buy and there's a big group of customers that will buy, that's the thing I'm looking for. I'm looking for the market validation done by a great driven entrepreneur.
Okay, and a related question to a certain extent. Are there hot verticals, and if so, which would you say are they? Is it bioscience, artificial intelligence, or is AI a temporary hype?
I believe that life sciences is one of the most exciting areas. And I believe that that's because you are seeing really powerful early signs that biology and information are connecting in a new way. And it's going to build a whole new way to go about providing personalized medicine. And that requires data, it requires intelligence, it requires compute power. So I think that's really interesting. I also believe that data-driven solutions will provide all sorts of investment opportunity. We are particularly interested not in the verticals as you described them, but we are interested in new ways of getting real-time feedback in businesses. And that real-time feedback is enabled by data and mobility and connectivity. So when I think about investments that we've made in Companies like Noteworth. Noteworth is providing real-time information to doctors, hospitals, and insurance companies using data and personalization. We also invested in a company that mitigates drones. If a drone came to the Super Bowl and it was dangerous, that would be bad. We protect the Super Bowl from that drone, and that's in real time using mobility and connectivity. But in all these cases, the intelligence and the data that you mentioned before does apply. And just thematically, we think about how to apply the technologies to real business problems.
Okay, and since, as you mentioned, a lot of the audience are technologists, what kind of person do you need on your team if you are a technologist and have an idea, but you don't know the market?
So I don't think it's hard to find out about a market. I don't mind people partnering up to do startups. And my answer would always be that find someone who complements you in areas where you are weak. And so in this case, you said, oh, I know the technology, but I don't know the market. Well, you might want to find someone who's going to do market validation with you. But I urge everyone in the room, even if you don't believe that you know how to do that each of you could actually summon up the courage to call 20 customers in an area where you know more about a solution than anyone else. But I would go and talk to the customers. You're the only one who understands what you're doing, and there's no reason why you can't call up a customer and find out what their problem is and go solve it. And if you see enough customers all with the same problem, and they represent a large number of other customers that are the same, whether it's in the US or Europe or wherever, some big market. I think that each one of you, even as technologists, should find the courage to go do your own market validation, and you don't necessarily need a partner for that. But if you want partnership, I love partnership. I have partners, and they help me every day. Just find people who cover your weaknesses.
Okay, this makes sense, and I think that a few people from our audience have tried that. But let me try to describe a case. You call a customer, they look very excited by the idea. We ask them if they would like to use it. They say, yeah, of course I would. But when the time comes to actually purchase and use the product, they're not actually inclined to pay for it. What can you do during market validation to avoid such pitfalls?
Well, I would be very clear to understand what the value of the problem is to the customer. If a customer has a really big problem, they should be able to explain what kind of losses they incur dollar-wise as a result of the problem. And if it's in the millions, that's a real problem. If it's not, then you have to wonder whether there is enough reason to go build something, because you really have to think about it. Am I solving a really big problem? And if your customer says, I have this problem, or I really could make $100 million more next year if I had this solution. And if you were able to hear that, understand it, and then provide a solution where you could demonstrate instant results, I don't see why a customer wouldn't buy. I worry the problem that has been experienced to date is perhaps you are not solving a big enough problem. I don't know. Perhaps the customer was unclear, or often when we go out and do market validation, we make sure that, and sometimes the companies have more employees than just one startup person, we make sure that more than one person goes on the market validation meetings. So you have the head of sales, the head of marketing, and the CEO and the CFO all in the room, because every one of them has a different filter they hear through. And then you can compare notes and make sure that you heard what the customer was saying. So you can never make a customer buy, but if you truly understand their problem and it's a big monetary problem or opportunity, I have seen customers move very quickly when you solve a big problem.
Okay. Another question that a lot of technologists exploring the idea of founding a startup ask is, okay, it's clear that we need to sell our idea, to do an elevator pitch to someone, but how can we be confident that the idea won't get stolen, or if it's shared to a bigger audience, how do we know that someone else won't implement the same idea?
Yeah, that's scary. And patents are not the answer because if someone steals it, patent lawsuits don't get anyone anywhere. They just make lawyers rich. But the way to outfox anyone and to win and not let anyone steal your idea is you have to execute better. You have to be the one who's moving more quickly. Often we are seeking a unique technology or a unique know-how, something that's harder to describe, so that you have defensibility for your idea over time. It's much harder to steal if it's really complicated technology. But mostly it comes down to execution. We look for the defensibility, but in the end, you just have to execute faster. If you have a big idea and you have evidence that the customers will buy, that's a good reason to raise capital, because capital helps you accelerate your momentum, and then the other team may not have capital and you have the chance to win. And it's always really sad when you do have a competitor and they raise capital and you don't have it, and that's when we lose. And that happens to me all the time. And that's the risk of entrepreneurship. But the best entrepreneurs somehow find a way to advance the ball and create momentum on a daily basis and become the number one player in the space.
Okay, you touched on something that another of our viewers is asking. You've had numerous teams that maybe failed their first iteration of product sale. What does it take to convince a VC to back the project again, supposing there are hundreds of other projects waiting on the door?
Well, once I support an entrepreneur, I have decided that she's the best and I want to support her. And every one of my companies takes twists and turns along the way, and many require more capital than we anticipated. What we look for is, have we advanced the business in a way that we expected? Or if we didn't, are we poised to advance it now, and that we still have confidence in the team, that we still love the entrepreneur, and that there is still a valid market? Sometimes it takes longer for the market to emerge than we anticipated, but that is not the fault of the entrepreneur, so we don't penalize her. And we are there to try and support the entrepreneur. In the case of Noteworth, we built the wrong thing, and I had to make a brand new investment decision, knowing that my first money that I put in was now a sunk cost. And I had to decide brand new whether I was going to support the future of the company. And I knew I loved the entrepreneur. He was great. And I could talk to the hospitals, and I talked to Six, and I talked to Google. And in every conversation, it validated what the entrepreneur was doing now. So we made the investment knowing that we had an opportunity with the new investment to make a great multiple, and we had just protected our original investment, and all those things went into the decision. But overall, we do like to support our entrepreneurs along the way.
Okay, a couple of more questions coming from the audience again. One of them is, does your background as a musician help you in your current role, and how?
I love that question. Thank you. I remember I used to be a little shy about the fact that I had been a musician. My partner, Tim, one time said, "It's one of your greatest strengths," and it made me feel a lot better. Music is a funny thing. It requires a tremendous amount of creativity, and in a band or an orchestra, where I've spent time in both, it requires good collaboration and good communication. Startup teams are a lot like that. And I've seen the same thing happen to bands that happen to startup teams. They break up or they don't do well together. But when you've got great people working together, the music can be great and the startup can be great. And the second thing I would talk about is missionary versus mercenary again. If you are in the music business to make money, you will probably not do very well. But if you are like the band U2 or the Police, you're making music that was inspired and unusual, and you did it for the soul, and they ground it out over years, just like entrepreneurs do. And then they found the success because they were doing something unique. So I believe it very much applies. And when Tim asked me to leave the business I was in, which was representing music artists and helping them advance their careers, to become a venture capitalist, I said, I don't know how to do venture capital. Why would you ask me to do that? And he said, because you're already doing it. You're backing teams, you're giving them a little money and seeding them, and some are growing and some aren't. It's the same business. You're just going to have to put your technology hat on instead of your music hat. That's how I think they're very much related.
That's an interesting parallel that wouldn't come to my mind at first. A question from Colin, who you know well. It's somehow related to the question earlier about verticals. Is there a future for publishing startups? As you know, Astea has significant experience in the area, but with no significant success. And you know Social Book. What have we done wrong?
I don't know enough about that particular company to tell you, and I have had a terrible time in publishing too. What I look for today that I didn't quite get right before is some kind of unique entry point. And I want to use a specific example and an investment thesis we had in a publishing business. I always worry Social Book won't apply to this. And so I'm sorry, I can't give you the answer on Social Book, but if you're investing in a bunch of music artists, you're praying that one of them becomes a hit band with a hit song, and only then will you make money. I don't like that model, and the publishing model, that represents the publishing model right there. It's a hits business. We invested in a company called Boom Entertainment. What are they? They came to us as a comic book company. That's a publishing business. We didn't think that much of the publishing business itself, although they were doing great comics with great artists, great stories, and the comic book category, which also turns into graphic novels, was a growing book category. So at least we had a bit of a tailwind on the publishing end. But our thesis and why we invested was these comic books are really gaining momentum in how they translate into television, movies, motion picture, and video games. Examples of that are the movie 300 or Wanted, where it was a comic book first, turned into a hit movie. So what we theorized was if you could make a break-even or profitable publishing company, then maybe you could stay alive long enough to have a hit book, hit song, hit movie in this case. And we're in the midst of making a bunch of television shows and movies right now based on the intellectual property owned by Boom. And if any of them become a big franchise movie, whether it's a Mission Impossible kind of franchise or a Twilight kind of franchise or an Avengers kind of franchise, Boom doesn't make superhero books, they make storyline books. But we believe that many of these are going to translate, and if they hit well, we should be able to have a very important intellectual property library like Marvel, which was very valuable when it was purchased by Disney, and like DC, which was very valuable when it was purchased by Warner. So that was the premise. And when and we had the same thing with Seismic Games, who was building games for Disney and for Pixar and for Nickelodeon and building video games, but meanwhile creating their own property. They finally built enough AR VR property that Niantic purchased the company so that Pokemon Go, Niantic makes Pokemon Go, would have the technology to help enhance their Pokemon Go and other future games. And we're about to release the first set of Seismic Games in the very near future. In each case, the premise was we have a real business here today that could translate into a much bigger business, but we're not going to go out of business trying to get to the much bigger business. So I hope those case studies are two ideas of how we went about publishing businesses to turn into big intellectual property businesses.
Okay, thanks for that answer. And I see that people from the audience are thanking you for the previous answer on the parallel between music and entrepreneurship. A few people are interested in social entrepreneurship, which poses a few challenges since the startups are targeting communities that usually cannot afford buying the product, or how do you start, how do you finance a social entrepreneurship initiative?
Yes. First off, I have seen successful efforts in social entrepreneurship, starting with Bill Gates, who it's an unfair advantage because boy, does he have a lot of money so he can go and solve these big problems. I see the Chan Zuckerberg initiative formed out of the fortune created by Facebook doing the same thing today, and I've seen others as well. It is harder because when you're attempting to achieve 2 or 3 bottom lines, not just one, each one can draw from the other and compromise the other. But I still believe that if you are solving a big social problem and there is a financial value around the social problem, that if you can find and identify that monetary value that's associated with the social problem, I think you may be onto something. And so I would look for things like that. If there is not a big financial value that is associated with the social solution, then I would actually suggest that people go after a not-for-profit avenue. And there's nothing wrong with that, because there are many people who want to fund not-for-profits that have a big social value. But if you want to be a corporation that builds great value, and you want to be an owner in that, and you want it to be a venture backable startup, you have to solve a big financial problem, because you'll be the recipient of some of that value. If you solve $1 billion problem and you can charge 20% of that as your fee, that's a $200 million company. That's pretty valuable.
Okay, and another question. Have you been in a situation where you fund to different startups or to different companies that can combine together, or that can help each other to get to the successful path, and the same for competing companies?
Yes, and it happens all the time, especially if you are an investor who is very vertically oriented. So if we were investing in a lot of biotech, we might invest in competing cancer solution companies. In our case, we tend to try never to invest in 2 companies that do the same thing. We want to invest in the one company that's going to be the winner. And by the way, we're wrong a lot. And that's the game of venture capital. You have to make a lot of shots on goal to get 1 or 2 goals. But when you're talking about the collaborative part, just yesterday, I was getting an update from a CEO, and I've already connected him with the CEO of another company. They've had 2 or 3 discussions already. And based on the update, I think they should speak again, because the first company I spoke with yesterday is probably a very important feature to the second company that I want to reconnect them. And if we combine them, yes, people might suffer a little less ownership, or dilution as we call it, but it would be a much bigger company overnight, because you take the 2 revenue streams and combine them together. And that's actually really valuable, because momentum and speed sometimes are actually more important in the venture community than just a great company. A company growing 300% annually, as many of my companies might, is much more valuable for the venture community and for ultimately the buyers than a company that's growing at 30 or 50% year over year. So I love introducing companies, and we try and shy away from having competing companies. But when that happens, we have tended to put separate partners on the boards and not share information in the partner meetings. We put up a veiled wall in between us, and we don't share the information so that both companies get the appropriate advice and handling.
Okay, this makes sense. I think there's a final ask from our audience. If there is a whole wasting millions in the venture capitalism that is in need of a product, please let us know so that we can fill in that hole with a product.
Well, I tend to shy away from speaking about areas where I think there's opportunity, because I've learned the hard way that I'm not as good as the entrepreneurs I back. I am looking for unique insight that is then validated in a market, and that's why I'm really harping on market validation, because that means a great idea meets commerce, and that's the most important thing for the venture community to see. I do believe that mobility and connectivity has created one of the biggest opportunities to create real-time feedback loops using data. And so whether it's Noteworth that's using data to drive better outcomes, or whether it's the drone mitigation platform that knows when the drone is coming and how many drones have been there over the past 6 months, et cetera. These things are all real-time feedback mechanisms that then drive different behavior and the ability to respond. And that is an area where thematically, we are very interested in finding real innovation based on that new capability. So if that's a very big hole, but it's one that we're very interested in.
Okay, thanks for that insight. It's very valuable. And I would end with a question that I ask all of our speakers. How would you end the sentence, software development is?
The most important thing for our future, and I hope that American young people will figure that out, because it's the future.
Okay, thank you, David. It's been a pleasure having you, and I'm sure that the audience shares the same feelings. Looking forward to seeing you in person when the situations allow that.
That sounds terrific. This was my pleasure, and thank you all for listening. Have great evenings, everyone.